Hello, 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 everyone. Happy Tuesday morning. Tuesday already. How's everyone doing? Good morning, Patrick. Good morning, John. I see people answer your question. John, if you don't have access to Discord, you have to email me at support@Path Trading Partners. Good morning.com, by the way, pathtradingpartners.com. Legion Reaver, good morning. Thanks for answering that, Jake. Okay, who else? Uh, yeah, they're very good. Yes, we have some great team working together. Legion Reaver's been creating stuff with indicators. Lots of fantastic stuff out there. This is a really fantastic community. So I appreciate everybody being part of it and hope it is helping people learning to trade and invest better or learning some other techniques that they can add into their current repertoire. Good morning, Tony. Good morning, Anissa. Good morning, Kalani. I bet you're going to ask a question about Bitcoin, Kalani. Mike. Hey, Chris. We can look at Zoom. Zoom gapping up. Sterling. Was your job getting in the way, Sterling? It's fine. Whenever Sterling's here, we appreciate everything he does with putting in the news. Well, hello, Charles. I like to say hello. I hope everybody doesn't mind me saying hello to each person. We'll keep doing that, and the channel just is what it is. I think it's more important to say hi. And let's start off with durable goods. Big miss in all the durable goods numbers. They were forecast to be contraction for the headline number at 0.4, but coming in at -6.1. I think this is the biggest drop since the COVID lockdowns. Oh, I can't say that. Because the video now is going to be. You can't even say anything on this damn channel anymore. On YouTube, you can't even say the words because they think, "Oh, we're gonna flag you." I'm not. I'm just saying that's a statement of fact. Also, durable goods, X transport pulling back and X defense pulling back. So big contraction across the board. Redbook coming back a little weaker. Did you also see Macy's was announcing that they're going to close 150 stores? Lots of stuff. We're going to get into really interesting, probably stagflation. Home price month over month for December. Remember, this is like December pulling back at 0.3. This is nearly 2 months ago at this point. Year over year was still up. And this data is so old that it's not really relevant unless you're following the longer term trend because they bounce up in spring. That's where it sits. This other home price index was for December was up 0.1. We got Barr speaking now, I guess, if that's correct. And we have consumer confidence coming out 30 minutes after the cash opened. Richmond Fed Manufacturing and Services and Dallas Fed Services. So keep that in mind. But the big stuff really starts tomorrow with the GDP numbers and then the PCE numbers on Thursday. PCE on Thursday. So we have everything backdated. We'll have to see if we get some bounce setups. I'll show you exactly what I'm looking at. Tesla still did not break down from the channel, still has the inverse head and shoulders in play and bouncing up this morning. Lilly continuing his pullback. Google slight bouncing after get beaten up. I'm really watching for a key breakdown in Google and the other mega caps slightly negative going into the open. Consumer cyclical, comm services, and basic materials leading, but nothing up huge. We're 44 basis points for consumer cyclical. The only thing pulling back so far is energy is pretty flat, but healthcare. Fed Watch still has 3 rate cuts priced in. So agreement with Powell, rate cut potentially starting in June. So nothing's changed with that. Fear and greed still in extreme greed. Barely. So we're going to have to see. We also had Zoom report yesterday with beat gap up. We had AutoZone gapping up this morning on a beat. We have Lowe's on a beat gapping down a bit, but Lowe's against very key resistance. Not much after the close, at least that I'm interested in. So what else do we have? Hey, Christoph, thank you for tuning in. Good morning, Mark. Okay, we got Yellen. Oh, great. Well, you were welcome, Legion Reaver. Again, Legion's putting together some great tools for helping people. Chris, thank you. Let's see. Charles, I think I'm just making sure I didn't miss anyone. Who else we have? What else do we have? Fed's bar does not make. All right, we don't have to worry about bar then. Daily cup and handle and coin is breaking out and approaching the first target. Thank you, Sterling. Good morning, Heinrich. Sterling really mastering the tools. All right, I'm watching. In the S&P, we hit that first key harmonic area, and now we've pulled back in a flagging channel. Here's what I'm really watching. And no, this is not a, we don't have a double bottom or anything, but I'm really watching to see, in order for this thing to really get a move on, we have to start getting above about 50.89, 50.90 level. If you're watching for something going into the open, I keep an eye. We have the downward channeling pattern and this little channeling pattern. So in order for us to really break down, here's what happened when the durable goods came out, or right before the durable goods, we had a sell-off, and then the durable goods little bounce. But this is your key level. Now, if you're really just looking at stuff, that is a little maybe potential double. Let's just see. I mean, I'm just going through some micro stuff right now just to show people, and it's not. So what does that mean if it's not? It means that's still the key breakdown level, potentially, but it would just be for a retest of this 50.75 area if we do break down. Below that, so I'd be watching pretty key support, especially going into the numbers tomorrow, 50.75. If we do break down, it's the same level as yesterday, I'm still watching. And that would be also if we start breaking, that 50.75 is the bottom of the 4-hour rotation zone, which is flattened out. So that's a pretty key area. Then I'd be going back to 50.57. To the upside, again, 50.89, 50.90. Above there, you're looking at 51.03. It's 5100 to 5103, and then you have 5119 to 5120. On a breakout to the upside, and this just isn't for today, you have 5135 area. The NASDAQ, just want to review something here yesterday. Nice little, this qualified yesterday for a double bottom pattern, for the little bounce, stalling out there, then continuing. And look at this. This is what we had on yesterday. Remember how important the 62.5 is. Coming up there, reversing right at that 62.5. By the way, there was, this is a really sloppy one, but it could have at least been used as a trailing level. And you're going coming down right near that first target and then just continue to sell off. So this 62.5 level has not changed since yesterday. I mean, there we go. That is the key level for the NASDAQ to get some traction. So you're going to be watching at least for a 1-hour close. So people always ask, well, not always ask, but people ask a lot of times, well, how can I do that intraday? Well, if it breaks above with shorter term momentum, I still need it to follow through at least with an hourly close. So you can keep trading the momentum, but if the momentum wanes and it dips back below there, it could be a false breakout. So I always look for the close on at least a 1 hour. The 4-hour is a stronger close above 18,061.25. Until that happens, this is still a key reversal zone between 18,033.50 and 18,061. We're trying to break upwards from the channel. Okay, so on the shorter term time frame, we came down, broke above it, and this could be a kiss the channel goodbye. So this is where I'm watching, especially about the 17,987 area. We start dropping back below there. That could be a little fake out move, and then I'd be watching for a return to about 1937 and the key support, especially with those GDP numbers coming out tomorrow if it stays range bound. Because you see, this has been a range bound over the last couple days, or since Sunday night, really trading Friday afternoon to Sunday night. And then no follow through yesterday. The breakdown level is still 17,926, and then the target below there is 17,855 area. Good morning, Heinrich. I have not. I'm following behind. Could you direct message me on Discord with that, please? Hey, my man. Do you want dollar index? Everyone add this to your trading psychology. The first principle is that you must not fool yourself, and you're not the easiest person to fool. And you are the easiest person to fool. There you go. Good advice from Sterling. So that's what I'm watching. Remember, so far we're basing right at the with the rising rotation zone. So we could easily, see a breakout to the upside. Now, daily cycles are getting to the top, but not rolling over yet. Weekly cycles are still headed down, but look, this is just a multi-week sideways correction since the highs eked out of the week of February 12th. Still just a sideways correction. Doesn't mean that has to continue, but that's all it's been able to do. The Dow, just keep an eye on this. This is a double that's triggered on the 1 hour and the 4 hour. So the targets below are roughly 39,000, 38,966, 38,920. And also keep in mind that is against the rotation zone, so it's the lower probabilities, but that would be just a return to the rotation zone area, and I'd really focus on that first and second targets with that one. So that's the only thing I'm really watching in the Dow. Oops, didn't want to change that. Other than that, the key resistance level is 39,190. Russell, again, rotating up still, making higher lows. Let's see if it can eke out a higher high. If we flip this around, the harmonics still. It barely missed that 87.5, so still the magnet price is 2073, and then above that, roughly 2088 to 2097 if it continues up there. So that's where that's at. We're seeing a lot of squeezies in the Russell 2000, a lot of the Russell 2000 stocks that aren't so much quality. We've been seeing a lot of squeeze plays in them. At least I have. VIX dropping below that 1380. I'm actually going to drop that level down just a hair to about 1375. So that's my key level right now to watch for. Choppier to pull back. We start breaking above that. If we start breaking down, it's choppier to bullish. Why am I more so favoring choppy mode? Because of all the numbers coming out Wednesday, Thursday, and even Friday. We got consumer sentiment. The DAX, this was a sideways little pause, and now breaking up. Next target still on the DAX is 17,737. So the DAX still in trailing mode higher without a topping pattern yet. So that's where that sits. Not much else to talk about. The major support now is back at 17,400. The notes really not doing anything, waiting on GBP and PCE numbers. Just pausing at the first target. Yield, not doing much either. Still the first target here that has not been hit is 4.395. So that's what I'm still watching an eye on. A major resistance is about 4.32. 10-2s hitting the little mini double top and just continuing a bit lower, but still coming into major support. Nothing else to talk about there. Dollar index for my man. Trying to get something, trying to find support with cycles at the bottom into oversold, but anything right now, this has not been able to get some support yet, and weekly cycles still headed down. So it's still fighting against the current, but the key level for at least to start closing above is 103.60 for any bullish case. The area to takes me off at least short-term bullish is still closed below 103.20. It still has got a lot of support below that, but that puts it more in just neutral mode. If you get a close above 103.20, we have not closed below that yet. Crude, still trying to base, still chipping away at this level. But if we really break below yesterday's lows, going to be watching for a pullback to at least the bottom of the rising channel. So that's the key level right there. A little warning sign is about 76.40 if we start breaking below that. Other than that, it's got to get above 78.60 to really start breaking out and test this higher channel area. we still have weekly cycles at the top, but not rolling over yet again. So I'm a little cautious, but this is so far building a higher base. But those are the key breakdown levels I'm watching here. Natty gas, keep an eye on this. We talked about this. Secondary reaction. Doji bar yesterday, today, bouncing up. Going to see if this closes above 1.792. That would officially, the double bottom is confirmed, but not yet officially triggered. Gold, not really anything. Gold, and this, this is a really long horizontal area. You can watch if it closes below this 2034.1 for triggering a possible bigger pullback. And when it's this extended sideways, I really don't like the double patterns because they have significantly lower probabilities, but those would be levels I just watched for the pullback. Silver, fascinating enough on the daily, because this was a weekly trigger, so it technically needs a weekly, but the daily at the base out to 62.5, closing right at that. It needs a close below that level though. 22.52.5 yesterday, 22.52.5 exact close at 62.5 level. So no, and since the stop's not raised officially, that's why that level still sits there. So it's not invalidated yet. But if it trades below 22.345, it is. Or if it closes below 22.525 today, it would be. And that would be to chalk one up. That didn't work. Yen still has a double top in place. But not much else to talk about there. Euro, that's why I'm keeping a more so a view on the dollar index, but it still can't get a close above this. It got to close above the 108 level, but now can't follow through with anything above 108.61.60 really. If we get a close above there, then I'm going to be watching for a return to 109.20 area. Other than that, the key support coming in about 108.20. Let's go to Bitcoin. So remember, Bitcoin closed above the 62.5, which shifted the probabilities, and the next target was 55,615. 55,615 taken out. So now this is getting very overbought, but cycles aren't yet at the top. The next key level is the 87.5. 62,300. So 62,300. The key support now coming in roughly about 52.7 on any pullback. So that's where the Bitcoin stands. The good old Bitcoin. I wish we could get the fraud out of there. Spiders, gap up today, 506.70. So any pullback would be to yesterday's close, which would be a target area and a level of key support. Yesterday's close at 505.99. Below that, below 505.99, we're roughly looking about 505. So those are the two targets to the downside. Now this, you can see the little pullback channel right there. So you can be watching for a break above that. It's similar to the futures. So you see right here, I mean, it's really got to start getting above this key level. This key area about 507.40 before I'll start watching for a breakout up there in the spiders. And then the next key level is about 509 to 509.25. Then we're looking at 510.13, and your major cluster area to the upside, if it continues this week, is 512.70 to 513. The Qs is pretty much a horizontal pattern right now. Key support 436.30, and then 435.85. If you break down below 435.85, we're looking at, my key level would be to this gap open at 434.49, 434.50. Other than that, it's got to start breaking above 438.50 area. 438.45, 438.50 to really get the breakout. Now, slight gap up today, 437.62. So any rollover play would be to 436.64, yesterday's close. Above this 438.51, Really keep an eye on 439.70 and then 440.59, then 441.93 are the rest of your levels for the next day or so. I'll get to the other things in comments in a second. Tesla, still holding. We have not closed below the channel. We came back to kiss the neckline goodbye. Still the first target is 204.53. We're going to open right there. So that is a stop raise target. The next targets are 209.72, then 214.91. Those are the next targets, but I'd really be focusing on about this 209 area. That's going to be a very key target. Remember, you still have a gap fill left from Wednesday the 24th to Thursday the 25th with the earnings disappointment right there. So that would be a very key target area also that I would focus on. All right. What have I missed here? Yes, I do use a 200 simple. What else? Crude attempting a %B after it failed in the overnight. Crude did not yet. The only %B was from the Friday's bar, which has not been exceeded yet. Yesterday's bar was not a %B setup, so it's not attempting that. What else do I have? Good morning, Richard. You're late. Thank you for being here. What do you think about using volatility term structure to help build bullish bears case for daily bias? You can definitely do that, Legion Reaver. Not something I really cover in here, but that is that's what you can definitely do that. Maybe at some point we'll cover some more. There's some interesting things you can do with volatility term structures and everything else, especially in stocks. But that's some really advanced stuff. I'm just trying to help people get some of the basics down and come up with their game plan. What do we have a question for? Zoom? You know, you can keep getting more and more complex, and there's some more advanced people in here. There are some more basic people in here, and basic is not bad. Now remember, so Zoom, gapping up on earnings. It was a beat. Did not think it warranted this much of a gap, but it doesn't matter what I think. 67.45 was the key target area. We're trading 67.89. I'd really watch in today's closing basis 67.45 to make sure it can hold a flat 200. That's also an area of prior key support and the 50% harmonic. All right, that's what I'd be watching on the closing basis. If it continues to bounce, 69.28 is the next key closing area. If you close above there, then you use the continuing harmonics higher. 71.11, 72.94. So that's where it sits. If it does not close above the 50, I would watch for a key support coming in at 65.63. You really don't want it to lose over the next few days at 65.63 level, because then we could be in for a gap fill in Zoom. All right, everybody's answering the question. If I missed something, Sterling, please put it in here. US dollar, Japanese yen, 1 hour double. 1 hour double. We have the daily double. Is this a little 1 hour double? It technically, let me look at the 4 hour. Let me look at the 4 hour. Yeah, it's sloppy, but it could qualify. I'd just be watching for that for pullback levels. But there's 105.05, and I'd actually raise a stop if this at this point, because it just missed that by a hair. 104.93, 104.81. By the way, doubles in a consolidation like this aren't as powerful. Just a little tip for everyone. What else? What else do you want me to look at, Sterling? What else did you want me to look at with the cup and handle? Coin. I'm getting behind. Oh, there's the breakout from the big term cup and handle and approaching the first target area. Yep. Also approaching the 50% harmonic. So coin's still rocking, especially with the bull case, the bull move right now in Bitcoin. SPCE. SPCE. Haven't looked at this in forever. Oh my gosh. Remember when this was a thing? What am I? Oh, it's in double bottom territory. That's pretty clear. So yeah. What the? Oh. Yeah, that's in weekly double bottom territory. Okay, interesting. And there's also a daily double bottom. So you have a double bottom within a double bottom. So that could be interesting. It looks like we're heading in the open right now, but that could be a little interesting play that could then roll. That could be interesting. Double within a double. We'll have to look at that tomorrow. Google, Christoph. Do you mind if I do GL? I like following that one slightly better. Google broke out of the... We had a pretty major uptrend line that was also broken in the short term yesterday in this triangle pattern. So on any bounce plays, I'm now watching for a breakdown, but I'm really targeting about this 132 to 133 area for a breakdown. It's still, there's some major support in here, but on any bounce play, I'm watching for rollover plays on Google and breaking this key support and tacking and hitting the 200 area. Because yesterday was a significant breakdown. Yeah, I think I went coin. I did that. I just don't have the targets up there. Oh, what did 1 hour double on the double bottom? Yeah, this is now a double bottom. That is a valid double bottom pattern. Yes, that is a valid double bottom pattern, but not yet triggered. There you go, Pep. All right, let me peek at the S&P. The S&P, so still holding 50.89. And remember, I mean, if you're looking for an area for support, it'd be 50.80 to about 50.79. Okay, and remember also, this might not be a trend day, so we could test various sides. That used to be a wonderful thing. Especially on the floor, they test the key sides on choppier days and try to get some liquidity coming in, and then reverse it. So, that's where we can say. So when we're watching these things, 50.89 stays an area of resistance unless we can really break out 50.89 to 50.90, and roughly about 50.79 to 50.80 is my key area of support. That's where I'll be looking for short-term reversal patterns. And then the only way I flip on those is if we have something like with the tick really following through. Now the tick had a pretty strong gap open, so it's pulling back now. So we're going to start to see how the markets, and if they find some support in this lower areas, and then when the tick bounces, how they move back up. So that's what I'll be watching going into the open, and that's where I'm headed now. So I shall talk to everyone later. Hope I didn't miss anything. Again, everybody, thank you for tuning in. I will be back tomorrow. Bye for now.